Thank you all who are attending live, and those that are listening on the recording. Thank you in advance for taking the time to listen to our presentation here. We had an event in New York a few weeks ago, and it went really well. And we had a number of people that were not in the New York City metro area ask us if we could do another one virtually. So today we are going to have a talk about how you can save on your taxes in 2023 through a number of investment strategies. Have guest today, Bruce Von Savage, who's with us as well. Bruce, thanks for joining us.
Hey, Jack. Glad to be here, buddy.
So we're going to talk, I'm going to talk first and just sort of talk high level about various tax saving strategies. And I'm going to turn it over to Bruce, who's going to talk specifically about oil and gas. First things first, always want to have the disclaimer up here. We are not giving specific financial advice. We're not financial advisors. I'm going to be talking about my own personal experiences and what I do through my real estate fund. Both of these opportunities are registered through the SEC under the Reg D 506. So nothing we're talking about is an actual offer to sell a security. But if there is interest, we have all the legal and SEC documents and disclosures for someone to review. Brief agenda. Gonna just give this introduction right now, and then I just want to go through high-level practical tax tips for tax savings in 2023. And I'll give an overview of how the real estate side of depreciation works. And from there, I'm going to turn it over to Bruce, and Bruce is going to talk about how oil and gas could actually offset active and W-2 income, which I know is a big limitation. And the reason I connected with Bruce originally was because I was looking for solutions for some of my investors and friends that could not take advantage of the tax benefits that I had because of their specific financial situations. So a little bit about myself and my firm. I run JKAMinvestments.com, and we are an alternative asset manager, and we run 3 different Reg D 506C funds, and we focus on building wealth without Wall Street. There's a little bit about part of our team here. Myself, got 2 partners, William Benatti, Zach Grizio, and also my wife, who is our CFO. There's a few other people behind the scenes that help keep things moving just from a marketing and accounting perspective. Just brief history of my background. I actually started in real estate in 2001, shortly out of college. Started with single family and small multifamily properties and was flipping houses. In 2008, I moved on to the banking side, and I was buying non-performing mortgages from various banks and funds. Launched a firm called Gemini Capital Advisors, and which later morphed into PRP Advisors. Funds and just large institutions. So was never able to to take investor funds until I launched JKAM a few years ago. And actually, we need to update this for 2023. We actually closed Fund 1 to new investors in 2022, and now we're currently involved with Fund 2, which is actively deploying capital. A little bit about our holdings. We're in 34 overall properties, 4 different asset classes, with multifamily being the primary one, but we're also invested in self-storage, student housing, senior housing, and actually we need to update this because we're also invested in a marina RV park as well. That's a pretty exciting investment. We're pretty dispersed across the major metro areas. You'll see they're largely growth markets, the Southeast and the Sun Belt. With a few deals. We have a deal in Indianapolis and a few deals in the Midwest. And a big reason about why I've gotten into this business is the depreciation benefits. So when I was in New York City, I was making more money than I ever had in my life, but I was losing 50% of it to the government. You have the federal tax at 37%, plus the state tax, plus the city tax. And I was looking for ways to invest more efficiently. So I spent a lot of time researching opportunities, and ultimately, I actually took the step to move to Puerto Rico. There's some additional benefits of being in Puerto Rico that are, would be another webinar completely. But the key with depreciation benefits is it's actually a loss on paper. It's not an actual loss, but through what's called cost segregation, and this is something that happens both on oil and gas and real estate. You can take a engineering study called a cost segregation, and instead of taking depreciation over what in some cases may be 27 years or 35 years, you could actually look at the actual life of the specific piece of equipment. And often that could mean that you get between 50 and 100% of your invested amount as a loss year one. So it's a very, very powerful benefit where you're taking all of the loss up front. And that means that the cash flow you're receiving is generally tax deferred because you've already taken the loss, and you're saving between 30 and 50% on your actual tax bill if it's structured properly. So I want to give a couple actionable tips for those of you. It's end of November, and there's a little over a month left to make decisions that could lower your 2023 tax bill. There's a few traditional methods that most people are likely somewhat aware of. You could maximize your 401k, which is, I think less than $20,000 or right around $20,000 at most that you can reduce on your taxable income. If you are self-employed, there are scenarios for a solo 401k, which I believe allows close to $50,000 for tax deductions. And if you run a small business, there are scenarios where you can set up your own defined benefit plan. Does cost, it's a lot of setup, some legal, some setup costs. It's a big decision, and those scenarios are out there that could save some money in 2023. But what we want to talk about today is primarily the cost segregation and the investment benefits, where for every dollar you invest, you can save a significant amount on your taxes. Now, the key difference, and you'll see the third bullet point here, oil and gas offsets active income. So real estate generally only offsets passive income. So if you work as a banker, a doctor, and you have a W-2 and you're making $500,000 a year, you can't take the real estate losses and lower your W-2 income. If you own a business and it's your primary business and you work there full time, you cannot generally offset your business income using real estate cost segregation. Now you'll take the loss and you'll carry it forward, but it can't actually lower your full-time salaried income. The one exception for that is real estate professional status. And that is if you, or what a lot of people will use is a spouse, works full-time or at least 750 hours a year in the real estate industry and 500 hours with rental property activities. So if you're an active real estate investor, or your spouse can qualify as an active real estate investor, that is one of the greatest loopholes to offset your taxes. And in that scenario, you can use depreciation from real estate to offset your active income. So if you have a question about that, I can't give specific legal or tax advice, but I could certainly point you to a number of CPAs that are willing to, that work very closely with a number of other investors to take advantage of that. So for everyone else, if you're not able to work full-time in real estate, if you're a banker, if you're a doctor, you're a lawyer, you own a business, and you need to offset your income in 2023, the best scenario that I can see, and I've personally invested in a number of deals already, is oil and gas, because oil and gas does not have those limitations of real estate, and oil and gas can offset active W-2 income. So with that, I'm about to turn it over to Bruce, but I do want to show the power of depreciation here. This is actually a screenshot. And if you look over on column 5, I took a $1.48 million loss because of depreciation. And that allowed me to save significantly on taxes. You know, on 1.3 million in gains, you know, I would have been paying 600,000 or more in taxes. But because of the power of depreciation, I actually carried forward a net operating loss for the following year. So I saved a significant amount in taxes, and I just wanted to illustrate the power of that. So with that said, Bruce, are you ready to talk a little bit about oil and gas?
Yep, absolutely.
Great. Here, let me stop this share for a second. And Bruce, I will turn it over to you.
Okay, thanks, Jack. Excited to be here. I appreciate the invite and being able to talk to everybody and kind of spread our message. So my name is Bruce Von Savage. I'm Vice President of DW Energy Group in Irving, Texas, right outside of Dallas. We are a 14-year-old company. We are in oil and gas. We're not an operator, but we are an oil and gas firm. Our business model allows us to partner with major companies. These are multi-billion-dollar companies. Continental Resources, EOG, Hess Petroleum, Marathon Oil. These are kind of the big boys in the oil business. And it's kind of on our website, Bridge the Gap. So Bridge the Gap, how do you... The normal investor cannot walk up to these companies and, you know, participate in the drilling of a well with them. And we kind of bridge the gap between these large companies and the investor. How we do that is there's a rule and a law in North Dakota, Oklahoma, and Texas. We've been in these states primarily over the last 14 years. We've participated in over 600 wells and 151 partnerships to date. So in North Dakota and Oklahoma, you have an 80-20 rule. When these major operators come in and they lease 80% of the acreage necessary, they can begin drilling these wells, these massive wells. These are 2 miles deep, 2 mile long horizontal legs, so 4 miles of total drilling. Frac jobs are 40, 50, 60 stage fracs on these, and the production numbers range anywhere from 400 to literally over 1,000 barrels a day. So we don't really worry about if the wells are going to perform or not. They don't really have what's a quote unquote dry hole risk in the scenario. These guys know exactly what they're searching for. It's more of an industrial and engineering feat. They know what's sitting underneath them. And our success rate out of, you know, the 600 we've participated in is almost 100%. So we're very, very fortunate to be able to partner with these. So getting back to how we do it, we have significant land resources. These are second and third generation landmen. They have relationships with these ranchers, farmers, the landowners. So we'll come in, and after these large companies have acquired 80%, or even sometimes before they've acquired it, we'll come in, we'll scoop up 2 or 3% of that remaining 20% that's available. And by getting in on the lease side of this, that allows us to participate in the drilling of these wells. Otherwise, you could not walk in. We tried. You could not walk up to these companies with $5 or $10 million and say, I want to participate with you. They just don't need you. They don't necessarily want you there, but legally, they have to accept us. with the way that we've done this. And as I said, we've done it now over 600 times. We normally will bundle, it's not just one well, we'll normally bundle in a partnership anywhere from 4 to as many as 12 wells in a partnership. Those wells will either be drilling or fracking, or in a rare occasion, we will get them to where there is backdated production involved. Those are absolutely fantastic because literally the partnership's already making a return before somebody would ever invest. So we don't get a lot of those. I wish we could get more, but the wells are normally either drilling or fracking. And what that does is it cuts down the time frame from, you know, when you would invest to when the first cash distribution is made and we start making, you know, an actual return. So that's a little bit about the drilling side of it. We do have current offerings right now, and we will throughout the remainder of this year. I mean, it's November, like Jack was stating. Everybody's kind of, you know, start scrambling now, realizing they're going to have to, you know, maybe pay the IRS more than they thought they were going to. And how can I offset this? How can I hedge to where I don't have to give my wealth away? Because we do not want to give our wealth away. So we're very happy and very excited that we also, with not only the partnering of these major companies and knowing that we're going to have production and producing oil wells, also the tax benefits are just incredible in this, as I'm sure, you know, Jack can attest to. You get anywhere, we averaged 84% in 2022 for our K1s across the board. We had some partnerships that were in the 91, 92% range. We had some that were 81, 82. But across the board, we averaged 84%. So there's not a lot. Let's use $100,000 as a round figure. You write a check for $100,000, we're going to provide you with a K1 in February that's going to show you an $85,000 loss. It's like Jack was saying, depreciation. It's basically a business loss. So the intangible drilling cost write-off has been around since, I mean, 1913 when the tax code was written. And it's never going to go away because a lot of these companies, if they took that benefit away that the government gives us, they'd probably pull up stakes and go drill other places, to be quite frank. So out of that, how do you come up with the formula for what does it really alleviate off your bottom line? So, and again, I'm not giving tax advice, but most of my guys, most of our partners will tell us this. So you take $100,000 investment, you have an $85,000 intangible drilling cost write-off. So that's 85,000. Then you're going to take that times your tax bracket. So guys in California, New York, the East Coast that are 40, 45% sometimes, you're literally writing $40,000 to $45,000 that's coming off of your bottom line when you're having to write a check to the IRS. I don't know of too many investments that the day you sign up, you're pretty well guaranteed that type of return back just in a tax benefit. So the rest is amortized over a 5-year time frame to where it all becomes 100% tax deductible. But in year 2, say, you're going to have income, you're going to be generating revenue. So the big hit for taxes is in the first year. Now, on the revenue side of it, you get a 15% depletion allowance. So 15 cents of every dollar of revenue is tax-free. You're depleting a natural resource coming out of the ground. So the government gives us both of those write-offs. But guys, we're experts at preparing the K1. I know Jack can attest to this. I can put you guys with major companies. Like I said, we're not, the days of going out kind of in the back pasture, hoping that you're going to hit oil. They're long gone with these guys. Most of these companies are multi-billion dollar companies that drill hundreds and thousands of wells, and their success rate is just, I mean, it's fantastic. So I would love to work with everybody. show them what we do, what our model is. I know I can help you out, not by only putting you with great companies, but also on the tax side as well. And I'd love to, work with each and every one that I can. I live for this. This is my passion. And, it's we're getting towards the end of the year. So I'd love to help everybody out in any way that I possibly could.
Great. Bruce, thank you very much for that. And I can attest, I've been in for 2 years, and obviously every well is different, but my first two investments, I've also, gotten over 50% of my actual cash back within the first 2 years as well. And I know some of the other investors have had better success than that, of getting a majority of their money back in the first 2 years. So it's an investment that should make a profit is the point I want to get across. It's not just the tax write-off. You actually do get monthly distributions once the oil is pumping.
Right. Let me touch on that, Jack. Thank you for picking my brain. I apologize. I've got a little touch of the flu, but this was very important to me to get it done. So, kind of what can you expect? Let's say if you make an investment, yes, the tax benefits are there, but Jack is right. Now, of course, you also want to make a return. So my point that I'm trying to instill in everybody is these wells produce, and they produce hundreds of barrels of oil a day, not tens or 50 or 60 barrels of oil. We just had some in Wyoming. They were as high, they came in over 1,000 barrels a day. Some of them were as high as 1,800 barrels a day. Is that the norm? No. What is the average for us? Probably somewhere between 500 to 700 barrels a day on these big, deep horizontal wells. So what kind of return can we make off that? Well, we are tied to the fluctuation of the commodity, right? If the price of oil goes up, our returns get better. If the price goes down, then obviously the returns go down as well. So kind of a benchmark price for us, kind of a rule of thumb. If we're staying around the $60 to $65 range, we're still going to make a very nice return. What's very nice? Well, I mean, for a lot of people, very nice is a percent a month. I think at a $60 to $65 oil price, we're probably looking at about 2 to 3% monthly, depending upon the production. When oil is at 80 to 90, I mean, I've seen revenue going out to where it's averaging 6 to 8% monthly, and vice versa if the price goes down. So we try to get our money back within anywhere from 18 to 20 months on most of these with a solid oil price. Again, that's the only thing that we can't control is the fluctuation of the commodity. So as long as the price stays up, what we can do at DW Energy Group, and our website is dwenergygroup.com. If anybody wants to, dive in a little bit further and take a look, and please do, I invite you to. I would feel that we're going to have good production. I think the price is going to be stable here for the next 4 to 6 years. It's in a good time to where we're not going to see a crash hit in the $40 or $45 range. I mean, I think that we'll stay at least $60 or $65, let's say, as an average over that time period, and probably even a little bit higher. OPEC is about to have their meeting here on the 26th. Saudi lost 23% of their revenue in the fourth quarter alone. So, I mean, they're down. I'm sorry, Q3. So last quarter, they were down 23%. Saudi really controls everything. So they're going to make more cuts. They're going to get the price back up. But I think overall, we've got good, solid, long-term pricing here. And it's a very good time to cash up as long as you're with the right company, as long as you can find oil. And I can assure you the 22 different partners that we have that are major companies worth hundreds of millions of dollars and in a lot of cases, multi-billion dollars, they know what they're doing. They know how to find oil, and they're very good at it. And we've got good relationships with all of them. And I think, as Jack can attest, our accounting, our reporting is top notch, and our team is very efficient and professional.
Great. I could certainly attest to that. And, the reporting, once you log in, it's very clear. It shows the exact wells you're in, what your monthly distribution, what your total distribution. And then when you click on the wells themselves, it literally tells you the amount of barrels of oil that were pulled out of the ground. As well as natural gas. There's some of the wells have some natural gas as well.
Right. And the accounting, to touch on that point, our accounting is top notch. It takes a team of accounting. I mean, we've got millions of dollars going out in revenue every month. We monitor all this, and the reporting, the accounting is behind the scenes. Those guys are the stars of the show because they make it all happen. But anyway, I really appreciate it, Jack, and anything that I can do, people can contact me directly. Be happy to work with you.
Great. And obviously, feel free to reach directly out to Bruce at DW, but also mention that you heard this webinar, and just remind him that you came from Jack Krupe at JKAM. And certainly, I know this is going to go out to our audience as well. Certainly, anyone can reach out to me personally, and I'm happy to. I didn't want to show it on this recorded webinar, but I'm happy to, screenshot or show some of my personal, personal results of my personal investments as well. I don't want to log in and accidentally, show my personal information on a public document or a public webinar here, but.
Right.
I've had good success personally, and I've known Bruce a number of years, and I've probably 15 to 20 different clients that have actually invested already. This started off very organically. It started off with a friend or two that had high income a few years ago, and it was like, hey, here's a potential option. So both myself and a number of investors really just tested this quietly over the last few years, and gotten comfortable to the point of bringing it out to my larger network. We did an event in New York City with some people I've done business with for 15 plus years that are paying the high tax rates in New York, that I brought it to them as well. We had a nice steak dinner in New York City, and we're probably we may do some more over time as well when we get together. It's a good excuse to get together and network with like-minded investors. So
absolutely, Jack. And Jack, I would just add in just real quick. So what's available now for everybody is we have an offering in the Bakken Shale with 3 different operators. It's Cord Energy, Continental Resources, and Petro Hunt. These are all, extraordinary companies, very well versed, thousands of wells that they've drilled underneath their belt. And every single one of these wells is either drilling or fracking. So I would say within the next 90 to 120 days, we would begin revenue distributions on these.
Great. And again, with less than a month left with a little over a month left in the year, one of my investors last year asked me, what is the highest return you can guarantee on an investment right now, and I said I don't like to use the word guarantee in hardly anything. I don't speak in those terms. Too many years of investing in real estate to really use a guarantee. But the one guarantee there is saving on your taxes, and that if you're in that high tax bracket, 40 cents plus of every dollar, will be saved on your 2023 taxes. So
right.
That's what do they say? The guarantees are death and taxes. So it's one of the 2 guarantees.
Hey, Jack, I'll just tell a quick anecdote. So I had a partner of ours last year, last minute, he was going to have to write a check for $185,000. He's helped me. What can I do? So I was able to put him in a good partnership, and he ended up getting a $13,000 refund for the first time in his life ever. Did the IRS send him a refund? So I'd love to help anybody out that I can.
Yeah, that's amazing. And for those private equity and bankers and those I knew from my New York City career that got their bonuses in March and the government took half of them, it could be a way to reclaim your bonus. So I know some people, Bruce, that probably would get 6-figure refunds because they've already taken hundreds of thousands out of their check when they received their bonus earlier in the year.
Look, we can handle any size, any amount. I mean, 100,000 or 100 million, if it needs to be, anything in between. So I can give somebody a menu. They tell us what they need. We can put it together very rapidly, but we're not going to put together something that is not going to perform. So you can rest assured of that. But any amount of help that anybody needs, we can certainly accommodate them.
Great, great. I'm not sure if there's any questions. If you have a question, feel free to put it in the chat or unmute yourself. I know we got a number of people listening live, and there'll be a lot more listening to the recording. Just quickly checking the chat here. Great. Well, I think, yeah, Bruce, I think we're good. And certainly I just remind everyone to please reach out. You can reach out to myself, at JKAM Investments, or Bruce at DW Energy. We'll send an email out with a copy of the recording to our list as well. And, we'll certainly, those that are on the LinkedIn invite, we can post additional information on our contact information in the LinkedIn invite. So thank everyone that was able to attend live, and everyone who's listened to this afterwards. Thank you for listening, and please reach out to Jack, jkaminvestments.com, or Bruce at dwenergygroup.com, and we're happy to answer further questions, and we'll try to continue to provide just good, actionable content on ways you can invest outside the traditional Wall Street financial system and save significantly on your taxes. So with that, we're going to say goodbye for today, and we'll see you on the next episode.
Thanks, everybody. Thank you, Jack.